5 ways to make money and get rich during inflation. If you have been wondering how to profit from inflation, in this video we discuss 5 ways to make money and get rich during inflation. It is possible to make money with these inflation investing strategies. We discuss investing in stocks, investing in real estate, how to make money with debt and cryptocurrencies. We also discuss the price of gold and inflation. You can build wealth by becoming a proactive thinker and adopting a minority mindset. Everyone anticipated inflation last year when the Fed dropped interest rates, but the Fed claimed that we shouldn't be concerned because it is only slightly above 2.4%. However, if we observe current events, we find that prices have significantly increased since that time. Not simply asset prices like those for properties, stocks, etc. I also mean costs for goods and services. The US's inflation rate has increased to its highest level since 2008 as a result of the struggling economy. Having recovered from the pandemic, people are returning to work, which means they are spending more money. In May, the Consumer Price Index increased by 5% annually, up from 4.2% in April and highest level seen since August 2008. The majority of people have been impacted negatively by inflation, but few people know how to profit from any bad situation. If you have been wondering if it is possible to make money off of this inflation period, this is the video for you. The answer is yes, because in this video could give you the idea you need to profit from this situation. Let's examine the various ways wealthy people are making millions from this inflation. Everything discussed in this video is for educational and entertainment purposes only. It is not intended to be financial advice. The first 3 options are the more traditionally accepted ways to make money with inflation, but stick around till the end as the last 2 options are a bit controversial. Hold real assets. The majority of people are unaware that money is a commodity that trades on the market, and that demand and supply are just 2 of the many variables that affect its price. Consider a hypothetical scenario in which there are 5 houses and $5 in the entire economy. One house costs $1. However, if an additional $5 is introduced in this market, there will be $10 but only 5 homes, which would increase the price of homes where one home will cost $2. That is a basic explanation of inflation. When the economy was about to collapse last year, the Fed made the decision to inject trillions of dollars into the system to stave off a depression by issuing stimulus checks and purchasing corporate bonds. 22% of US dollars that are currently in the market were printed in 2020, so based on the example above, we can see that inflation is inevitable. This is where opportunities can be found in real estate. Since interest rates were at their lowest, everybody who could afford a home at the time decided against storing cash and instead invested right away in real estate. Whatever the real rate of inflation is, it doesn't matter. Housing prices increased by 15%, and according to some estimates, even by 18 to 20%. The best investors, however, went beyond simply purchasing homes. They took out mortgages because that gives them the opportunity to leverage. They turned good purchases into excellent ones, particularly when interest rates were at historically low levels. Real estate investors made huge profits in addition to beating inflation. 2. Stocks. This is a well-liked choice. Buying a stock entitles you to a portion of a company. They are known as shares for this reason. The worth of that company increases whenever there is an excess of cash in the economy. Thus you are expanding at the same rate as inflation. Majority of people spend money for basic wants and requirements, and this means businesses grow more quickly. This means when you have shares from a business, you will not only outpace inflation but also benefit from it. The S&P 500 increased by 40% between July 2020 and July 2021. That is an incredible rate of return, especially considering that this was at the height of the pandemic. Think about how much of those stimulus funds were spent on Apple or Amazon products. People are now returning to work, the economy is recovering, and people are spending again. These companies are about to expand much more quickly. The secret is to keep your money in assets that are hedged against inflation. Wealthy folks typically don't carry a lot of cash but reserve a little portion of their net worth as liquid capital in case of emergencies. They own a specific proportion of the companies they have built up, which explains why they are so wealthy. Their wealth increases as their firms expand. Even with just a few $1,000s in stocks, you can still benefit from inflation in the years that follow. Stock prices may not have increased by 1,000% as with cryptocurrency, which we will discuss later in this video, but they are much more stable and secure. 3. Gold. The fact that gold has always been an asset that maintains wealth, particularly during crises, is what makes it distinctive. This is how it works. The price of gold increases whenever the future appears uncertain. If you look at the 2008 crisis, gold prices went from $600 in 2007 to $1,000 in 2008. This is because investors panicked and bought gold right away. A currency may depreciate and eventually lose all of its value, but gold will always be valuable. Gold has maintained its worth from the dawn of civilization. Whereas the US dollar has lost nearly 90% of its value in the past 100 years. In 2010, investors had a new bout of panic and began aggressive gold buying, which caused gold prices to reach a record high of $1,900. But since then, the gold bubble has burst, and the US economy has stabilized. Investors typically avoid purchasing gold in times of economic growth and instead place their money in assets like stocks. This is why gold prices decline during steady, predictable periods. However, gold prices started to rise again in 2019 as the US and China started a trade war, and the pandemic made it worse. The price of gold surpassed $2,000 for the first time during this period. Stocks or real estate differ from gold in that they generate income via rent or dividends. Stocks and real estate are operational assets that offer services or a product. This is why stock values continue to rise. The businesses that support them are expanding. Take Apple for example, it sells a lot more iPhones than it did 10 years ago. That is why it is more valuable today than it was 10 years ago. But if we look back through history, gold has always been a terrific method to profit from inflation. $1 was a lot of money in 1973, but today it hardly buys you candy. In contrast, gold prices have increased from $100 in 1973 to $1,800. This is why gold is used to hedge against inflation. If you are enjoying this video, be sure to give us a thumbs up and subscribe to the channel. Now let's continue the video with the next two controversial options. 4. Crypto. I wasn't sure if it should be on this list. It is controversial, but we cannot ignore it because a lot of people have made money from inflation by buying crypto. It has great potential and great technology behind it. Because it's still in its early stages and hard to predict in the short term, it is very risky. The Fed's decision to print trillions of dollars is one reason why Bitcoin's price went up so much in the last year. When investors rushed to buy Bitcoin, the logic behind it was that Bitcoin is like digital gold, so they bought it. A lot of people don't remember that its price was only around $8,000 at the start of the pandemic. Before the trade war, the price of a Bitcoin was only $3,600. If you were interested in Bitcoin when most people weren't, you could have made a lot of money, but most people get interested in something when it's in the news. But the smartest people got in before everyone else, and since then, their wealth has grown by 10 to 20 times. Right now the price of Bitcoin is around $20,000, which is down from its historic high of about $68,000. So if you can stomach the price fluctuations, adding Bitcoin could be part of your inflation-beating strategy and you could benefit if its price starts to go up again. 5. Debt. Many of you might not like debt very much, but it can be a good thing, especially when inflation is high. The problem with debt is when it is used for consumption. If you use debt to generate income, you stand to make a profit. Here is the logic. If today's dollar is worth more than tomorrow's dollar, that means if I borrow $1 today and give it back tomorrow, I have made a profit. Today, the average price of a house is around $350,000. 20 years ago, it was about $150,000. So because the real value of the dollar goes down every year, the same $150,000 doesn't buy as much as it used to. Let's look at another example to illustrate. When the Fed lowered interest rates and started buying corporate bonds, guess who started taking out all those loans? It was companies like Amazon, Facebook, Microsoft, Apple. Even though Amazon, Facebook, Microsoft, Apple, and so on are some of the largest companies in the world and these businesses have no need for that money, they still borrowed money. Apple example has a pile of cash that is worth more than $200 billion. Can you guess why they did this? Well, if Apple takes its $200 billion in cash and invests it in the S&P 500, they get a return of at least 10%. Apple can borrow money at 1%. Even if Apple invested that borrowed money in their business and made a return of 5%, they are still making a profit of 4%. On top of that, Apple gets tax breaks when they borrow money, so they save money on taxes as well. Smart move. So the takeaway here is that if interest rates are lower than inflation, you should be able to make money on any money you borrow. Which of these options will you use to get rich during inflation? Let us know in the comments below. If you have enjoyed this video, give this video the thumbs up that it deserves. And make sure to subscribe if you haven't done that yet. Thanks for watching, and until next time, be distinguished.